I'm the YouTuber that collects reliable trading data and builds profitable day trading systems based off that data. And how would you like to be able to enter into your trades with nothing but confidence? How would you like to leave the emotions on the doorstep? How would you like to have a very simple approach that all you need to do is wait for it, and when you see it, all you do is act? Well, that's my primary focus over here at the High Performance Trader. I understand the importance of becoming a confident trader, somebody that can spot their opportunity and pull their trigger on it without overthinking. See, overthinking is going to cost you your profits, your dreams, and all your ambitions as a day trader. So if you want to learn our strategy, all you have to do is click the link below. The first link is going to bring you directly to my website where I break it down in deep detail. It's a very simple 3-step approach, and it's the same approach that we're going to be going over today in this video. So click that link, go to the bottom, put your first, last name, email in, and I will email you these high-level summaries that we're going over today completely for free on a weekly basis. See, this is the only way to develop confidence. For those of you that think one day you're just going to wake up and be able to pull the trigger the way that you're supposed to, the way that you're going to be able to scale up and be able to really hit that next level, that's not just going to happen, okay? You need to understand. You need to understand how the market works. You need to understand your strategy inside and out. And if it's not repeatable, it's not going to be effective. Okay, so the week we're going to be breaking down is the second week of June. And so far for the month of June, we've had 13 trades. 4 of them have been unprofitable and 9 of them have been profitable. Here's a perfect example of our edge right here. See, number 1, you identify open print. That's the 930 bell price. You're going to see it as a yellow line. Number 2, the moving average cross. Okay, once the 5 and the 20 cross, I now know that somebody has taken control of the market conditions. In this case, it's sellers. And then number 3, you get that green bar that gets ignored. Once I see that, right? Once the bottom of that green bar gets blown out by the next candle, I'm in the market short. See, there's no thinking. There's no second guessing. There's not a moment in time where I have to conjure up what may or may not happen. See, the market's telling me what's going to happen. Therefore, I'm entering into the market and I'm putting my stop directly above the previous candle. See, this is a way for you to spot opportunity and always utilize proper risk management. Okay, so in this video, we're going to be breaking down how our strategy had performed the following week. And for a quick overview, we've been doing this for the last 10 months. So here's our large data review. In the last 10 months, we've taken 178 trades, 145 of them have been profitable, leaving us with a 81.46 win rate. And see, this is what you need to be able to confidently get into the market, with being able to filter out all that noise, all those other setups that you're FOMOing into or rushing into, right? This way, you get rid of all that, and you're only executing on clean opportunity. Okay, so far for the month of June, we're sitting at a 71% win ratio. So let's break down last week. So last week started right here. 6/9/2025. So once again, very good execution this day. Market opens up. We got open print. Step number 1 done. Now number 2, we need the moving average cross. So we finally get it right here at around 10:20 a.m. Next, we get our red bar that gets ignored. Once it's ignored, guys, you know it. I'm in the market long. My stop goes directly below the previous candle. So we're getting in the market here at around 600. We're targeting 601. We rally into pre-market high right here at 603.7, and price rejects on us. Now, is that something I can control? Absolutely not. We caught a beautiful move. It just didn't have the continuation. Therefore, I'm not worried about it. Did I execute appropriately? Did I pull the trigger when I was supposed to? Yes. Well, over the long term, as long as I do that, I make consistent money. Okay? Once again, we cannot win every trade. That's not even the goal. See, it's thinking that way, just trying to be green for the day. That's what's costing you your consistency. Because what happens is you'll start to compromise just to be green. See, if I just want to be green every single day, I'm going to start behaving in a manner that's not consistent. Or if I can accept the fact that some trades are just going to go against me, but as long as I follow my process over the long term, I now have a repeatable, consistent, and effective approach. See, this is the mindset that we instill over here at the High Performance Trader. I'm not just trying to be green for the day. I'm trying to be green for the week, for the month, for the year. See, this is the paradigm shift that's required for you to become the trader that you've always wanted to become. So, number 2, same day, 6-9, our edge presented itself again, right? We got this moving average cross off open print. Got a green bar that's ignored. At that moment, I'm getting in the market short. I'm putting my stop directly above the previous candle, and the trade just goes against me. Okay, so we had 2 losses that day. Now, 6-11. Beautiful. This day was CPI. See, most traders, when they hear CPI, they start to get really nervous. They're like, oh my God, there's tons of volatility. There's going to be tons of fake outs, right? And then they create this horrible false scenario in their mind that then leads them to, yet again, make horrible decisions in the market. See, over here, we had a very simple pre-market plan. If we got our edge, our criteria off the open, off the critical levels, we're going to be hopping in the market accordingly. It's exactly what we did. Look at this. It's beautiful. We get a moving average cross initially to the downside, but there's no RBI or GBI. Therefore, no trade. Buyers show up, defending end of day right here. We get that moving average cross and that RBI right at the same candle. At that moment, we're getting in the market long. Where's our stop go? Directly below the previous candle every single time, right? Caught this beautiful move up here, got out of the market after about $1, locking in the win, okay? Second trade, same day, same criteria, just to the downside. And guys, this is the power of repeatability. See, I used to be the trader that would rely on luck. I would hope the market went in my favor. Now, until my edge shows up, there's no move for me. There's nothing for me to do. All that I need to do is sit back and just wait for it. See, there's no more anxiety when you understand the percentages. You understand the win ratio, okay? Price comes above open print, we fall down below it. We don't just enter into the market because I have no clear spot to put my stop. So what do? We wait for it. Price falls below open print. It falls in the previous day high. It rallies back up into the open. Look at this. It's beautiful. Straight green bar. At that moment, I'm thinking buyers might have it. But yet again, my edge isn't present until this red candle smokes the bottom of that previous green candle. At that moment, I'm in the market short, and my stop loss goes directly above the previous candle. 104% ROI on that trade. Beautiful. Literally less than 30 minutes. Okay? So yet again, following strict risk reward rate management always. Stop always goes above or below the previous candle. Okay? Friday, 6/13. We traded this live on YouTube because we trade live on YouTube every Friday now. Okay? Look how beautiful this is. Price rallies off the open. There's no move for me, okay? My edge isn't present. Yeah, there's open print, there's moving average cross, but there's no RBI or GBI. Once again, no move for me. Price rallies into previous open print, starts to reject, falls down below previous day low, falls down below open print, okay? Ready? Price rallies up, we get the green bar that gets ignored. At that moment, you guys know the rest. I'm in the market short, my stop goes directly above the previous candle, capturing a beautiful move all the way down to 596.85. That was so beautiful. We had tons of people on the live. It was an absolute slam dunk. Once again, not special, not unique, but repeatable, okay? And then to the upside, exact same criteria, just to the upward direction. What do we get? Price falls down below, we take our profit. Price rallies here off 596.85. Do we just enter long because buyers are showing up? No, because we need somewhere to put our stop. And we want to trade healthy trends, okay? Just because buyers want to show up doesn't mean anything. I need healthy trends for continuation. What do we get? A beautiful red bar right here. Gets ignored in the market long, stop below it, capturing a beautiful move to the upside. So yet again, guys, our goal is not to be green every day. Our goal is to execute a simple system that's going to get us in and out of the market with that confidence, that control, that conviction. And if that's what you're trying to accomplish, click the links below, get involved. I'll see you in the next video.